Hello traders, you are welcome back to the Forex Geek channel, and in this video we're just going to be discussing the candle range theory. All right, now most traders look at a candle and only see the open, close, high and low. All right, the open, the close, the high and the low. But what if I told you the entire range of a candle holds the key to understanding market reaction zones? This is candle range theory, and once you understand how it works, you'll never look at a chart the same way again. Now, what exactly is candle range theory? Candle range theory focuses on analyzing the full range of a candle from the high to the low. Okay, as a zone of market intent. You analyze these as a zone of market intent from the high of that candle to the low of that candle. Every candle, especially strong impulsive ones, reveals where liquidity was taken, where imbalances exist, and where price may return. So instead of only marking support and resistance at candle closes or wicks, we look at the entire range and study how price interacts with it. So think of the candle range as a footprint left by smart money. If price breaks above a candle's high and then return back into that range, that can be a clue that a fake out or trap just occurred. Okay, so if price reacts cleanly to the mid-range or low of a previous candle, it may be respecting that range as a decision zone. Now, to apply candle range theory, you need to identify a significant candle, just like this one that I identified here. Usually, it's a large impulsive candle that breaks structure or sweeps liquidity. Once you have identified that significant candle, the next thing for you to do is to mark the high and the low of that candle. You can optionally mark the 50% midpoint, but that is optional, right? If you want, you can do that. If you want, you can let that be. Okay, then after that, you need to extend that range forward. Observe how future price interacts within this zone. Okay, observe how future price interacts with this zone. Watch how price respects the edges of the range. Can you see how this significant candle currently, can you see what price is doing around this high of this significant candle? Can you see how price is ranging around the upper part of this candle? So you can see that significant candles like this are important. You need to pay attention to them. I need to look at how price reacts around the range of the candle from the high to the low. Okay, you watch how price respects the edges of the range. Does it bounce off the low or the high? Does it weaken and reject? Does it consolidate inside the range before it break out and all of that? Ask yourself those questions. These clues help you decide whether to enter, wait, or avoid the setup entirely. Now, candle range theory becomes even more powerful when you combine it with market structure. That is when you use candle ranges at swing highs or lows. And also when you combine it with session timing. We watch how price respects candle ranges during London or New York Open. And also liquidity concept. If price sweeps a high and re-enters the candle range, that's a sign of a trap. For example, if you see a bullish candle that breaks a high, maybe during the London Open, but New York reclaims that range, maybe during the New York session, maybe price comes back into the range, it's likely a liquidity grab. So price may reverse and use that candle's body or low as a rejection point. So many traders use candle ranges the wrong way. They treat every candle as important, when in reality, only select ones matter. And some traders forget to consider the time of the day and the volume. They also use candle range zones in isolation without confluence. These are some of the mistakes that some traders make. So you should always filter candle ranges with other data. Is it aligned with higher time frame structure? Did it occur after a sweep or a news release? For example, when you notice a large candle like this, it could actually be a result of a news release. So you need to confirm if it was a news release that powered such an impulsive candle. Okay, so it's important to take note of all these things. It's very, very important. All right. So you need to consider the time of the day, the session, and check whether there was a news release, whether there was a liquidity sweep that happened, that resulted into that candle and all of that. So it's important that you note that candle range theory is not a magic bullet. It is a contextual tool, a way to frame price action and reduce emotional entries. To master the candle range theory, you need to backtest it on your strategy. Look at how price reacts to previous H1 and H4 candle ranges. H1 and H4 are the time frames that I would recommend that you focus on this candle range theory. Okay, you need to check how price reacts to the previous H1 and H4 ranges. Use alerts at candle range highs and lows. You can actually set alerts, whether you're using TradingView or using MetaTrader 5 or 4. Just take advantage of the alert feature. Also, be patient. Let price come to your level. Do not chase. All right, do not chase price. You can see in this particular case, you can see this particular candle, this impulsive bearish candle. You can see that price, we had a liquidity sweep around here. Can you see? Can you see a whipsaw? I don't know. This candle might actually be a resultant effect of a news or something, because you can see how this whipsaw. You see wick up and wick down, right? And then eventually there was a brief consolidation, and then eventually we had what seemed like a breakout to the upside and then a breakdown again. So this might have stopped out the sellers, and then this would stop out the buyers, and now looking like price is coming back up again. But depending on the way you are trading, right? If you were just targeting maybe the short-term resistance, after this stuff happened, this liquidity sweep, or rather let's use this one. After this happened, and then because price came to this zone, and then we had price enter back into the range. We are watching how price is reacting around this range. So now we can see that we had a bullish candle around here. So probably we could have considered a buy trade, but with caution. We have considered a buy trade with caution, stop loss below this zone. And then as a breakout from this high happened, we have just targeted maybe the nearby resistance, nearby swing high, and exited the trade. So when you notice such an indecision like this, you should not be targeting maybe a very, very long move, because that indecision could mean that both buyers and sellers are trying to gain direction. So once you internalize how price behaves inside and around candle ranges, your charts will become less noisy and more intentional. If this video gave you clarity, hit the like button, subscribe to the channel, and let me know in the comments if you are using candle range theory in your setups. See you in the next breakout. See you in the next breakdown, okay? Stay sharp and stay disciplined. Happy trading.